Let's welcome in our morning guest. T.S. Harihar is now with us. Amar Singh is joining us, as well as Vikas Sethi is with us. Vikas, you look at the F&O data as well quite closely. Where do you expect the expiry? Any stocks to watch out because of F&O data?
Good morning, Pankaj. Good morning, Manisha. As far as our markets are concerned or the expiry is concerned, I think the Nifty looks to be range bound and we could expire somewhere close to 9,400. If you look at our markets over the last 4 or 5 trading sessions, we have been seeing that Nifty has been pretty much range bound, but we've been seeing a severe or a sharp sell-off in mid-cap stocks after the recent run-up which we had witnessed. So I think there are several quality mid-caps which have also corrected close to 20-25% over the last 4 or 5 trading sessions. So in my opinion, investors should look for quality mid-caps which have been performing well and which are expected to do well in the coming quarters, and they should look at these stocks from a long-term point of view. So I would be a buyer in the mid-cap stocks right now at the current levels. I think valuations have become attractive and the ones which have been doing well should be looked at.
Right. Harihar, what will be your call on the mid-cap space? Before we go to the picks, what's your call on the mid-cap space?
See, I think we'll have to be a little selective because what's happened is that, over the last probably 7 or 8 months, literally every Tom, Dick and Harry has run up very rapidly. So obviously there is going to be some kind of a separation of the wheat from the chaff. We are going to see quality mid-caps probably taking support, bouncing back. The also range could probably see a little more of pressure from here. So, we would say stick to quality, be more stock specific. But I think mid-cap stocks per se still have a lot of way to go.
Way to go on the downside or upside?
On the upside,
Right. Let's talk about your top picks as well, Harihar. Now that mid-cap stocks have fallen, what will be your top buy ideas once this fall has happened?
See, for the time being, till the time the uncertainty over the oil prices and the US Fed is completely out of the way, what we propose to do is stick to large caps. So we have 3 large caps today, 2 on the buy and 1 on the sell side. On the buy side, the first is my old favorite State Bank of India, especially after the recent correction of about 20 rupees that it's seen. We are once again reiterating a buy on State Bank of India with an upper target of about 350. We are also initiating a buy on Tech Mahindra. See, within the IT space, we believe that this is the least susceptible as far as the Trump shenanigans or even the US H1B visa is concerned. So we like Tech Mahindra with a price target of about 470, 475. And the last, of course, we are negative as far as ICICI Bank is concerned, especially after that rally to about 300 levels. We believe it's a good candidate for selling with a target of about 250 on the downside.
All right, remaining negative on ICICI Bank. Amar, good morning. What are your top picks?
Yeah, very good morning. The first is TCS. Overall, we've seen a significant rally in TCS from almost 2250 levels since 19th of April, and it continues to trade strong. If I look at it from a technical perspective, from intermediate term trend as well as short term trend, the overall is positive. So any pullback towards, I would say, if one needs to buy TCS, then one can look at buying TCS in the range of 2550 could be the range, and the target is 2610 with a stop loss of 2508. So that's the first one. The second stock is Granules, Granules India. What we've seen in Granules is that it has witnessed sharp selling coming in from almost 150 levels, and with the overall short-term trend remaining bearish, so one can use any pullback for a shorting opportunity. So that could be sold around 135, 136 with a stop loss of 142 and a target of 128. And the third stock is Bharat Forge. What we've seen in Bharat Forge is that Bharat Forge has corrected from almost 1170 levels to 1020, and then it has pulled back over the last couple of days. Looking at the trend perspective from a long-term as well as an intermediate term trend, the trend remains positive. So Bharat Forge is a buy in the range of 1075 to 1080. with a stop loss of 1038 and a target of 1130.
Right. Quick check of the currency as well. In opening move, in just the first few minutes of trade, we've seen the currency gain quite a bit. It's up 1/3% now. So after 3 days of weakness, suddenly we've seen at least some good news coming in on the currency. 64.54 is where the currency is trading versus the dollar. A day earlier, we had seen a very small amount of buying coming in from FIs in the cash markets. Maybe, there is some stop to the kind of selling that we're seeing. Mr. Harihar, I have a question for you. You've again been negative on ICICI Bank. Now, can you tell us what makes you so pessimistic? Because, the earnings are done. And now it seems that the management is seized of, all the problems about the NPAs. Plus, on the charts, that stock is not retreating below 300 rupees a share. So, where is this, negativity coming from? Are you worried about, the news that we're hearing about the bad loans reconciliation, the SDRs, and the S4 rates, the outcome of all of that?
See, the extent of reconciliation is something, honestly, most of us don't have a clear idea about. But whatever little we have seen in case of Axis Bank and Yes Bank, it's surely a problem that exists. My worry on ICICI Bank has continued to be over the last few quarters on the bad loans front. And I think, unfortunately, over the last, 4 or 5 quarters, that is one problem they're not able to grapple with. And every time we see, like in the last quarter, they had a big problem with JP Group. And I'm sure there are, 25 other large industry groups where they have an exposure where that is going to manifest itself over the next 2 or 3 quarters. So I think asset quality is going to be a major problem. And I think every quarter we will see that some kind of a group will manifest itself in some form or the other. So that is one big worry as far as I am concerned. Second, I think that unlike a lot of other banks, I think the earnings traction is still not coming. In terms of valuation, it may probably appear to be cheaper in terms of PE or PBV, but then the earnings traction is still not coming back for the bank. So number one, asset quality. Number two, earnings traction. I think these two remain the big concern for me. I think after the rally from about 220 to about 300, most of the, short-term upsides or medium-term upsides seem to be priced into the stock. So I think from these levels, I see more of a downside risk than an upside potential on the stock.
Right. Let's talk about some stocks that will be in focus today. Lupin, of course, was in focus yesterday based on numbers. They had an analyst meet at 7:30, and there were some key takeaways about that. So Lupin has guided for about 3.5 billion revenues for 2020. Now, their earlier target for this was FY18. So that's what basically lowered the guidance or extended the guidance. FY18 EBITDA margin guidance, same as 26 to 28 odd %. That's what they have done. And 30 plus launches into US is what they are expecting in FY18, which is a decent number. They expect a strong recovery in FY19. FY18 R&D expenses almost the same, but there have been all across cuts as far as Lupin is concerned. So US sales was big disappointment. We'll just pull up the brokerages for you. All across EPS cuts of about 8-10 odd %. Target prices have been cut. However, a lot of people have not downgraded the stock because probably it's fallen quite a bit, but still target price cuts have happened. People have changed their estimates in terms of earnings, and that always has an impact. This is the pre-open price indicating 4.5% in terms of decline. Mr. Harihar, what will be your call on Lupin? Do you think just stay away when negative news flow is coming, irrespective of these stocks already underperforming?
See, the problem, Pankaj, is that nobody right now has a real understanding of what is the potential damage they could see both in terms of top line and bottom line. Bottom line is not so much a concern. I think the bigger problem for them is top line, because we have seen consistently the revenues have been falling, and as a result the profits have been falling. So, and the way we saw in the case of Taro Pharma, the way we saw in the case of Lupin, one thing is very clear, that the US market, which was the predominant market as far as the pharma sector is concerned, I think that is really coming back to haunt the entire sector. So till the time there is clarity on what's going to happen on Obamacare or what is going to be Trump's stance on generic pharma, I don't think it really adds a lot of value trying to buy these stocks. They may look cheap, I'm not disputing that, but I think the traction is not visible at this point of time.
All right, so some of the pharma stocks remain avoids. Let's talk about some other earnings that came out. Dish TV came out with the fourth quarter earnings, and pretty disappointing actually. The sales came in at 708 crore rupees. So on a sequential basis, we've seen decline in sales. We've seen a loss of 28.3 crore rupees versus a profit of 26.7 crore rupees in the period a quarter ago. EBITDA is lower at 190.6 crore rupees. Now, if you take take a look at the margins coming in at 26.9%, it's lower than what we were expecting. We were expecting margins closer to 31%. Subscription revenue is coming lower than expected at around 620 crore rupees. The net additions of new customers is lower at 165,000 versus our expectation about 230,000, and the ARPUs are also way lower at 134. What we were expecting was a figure closer to 151 rupees. So for Dish TV, I think this is what it happened a day earlier. So we'll watch out for the reaction. The earnings are looking not very inspiring. Let's talk about a few more stocks that may react to the earnings that came out post market close. Gujarat Gas came out with a reasonable set of earnings. We saw sales up at 1400 crore rupees, but the bottom line seeing a big drop of 63%. EBITDA is also lower at 146 crore rupees, and the PNG volumes came in at 4.3 SCMD, which was up about 16%. For Jain Irrigation, we saw the profits up about 24%. The revenue was up about 10%. EBITDA was higher by about 9%, and we saw margins also expanding. Margins flat actually at 15.5% versus 15.6%. For Adani Enterprises, we saw profits coming in at 218 crore rupees, which was a jump about 50%. For the profits are much higher. The revenues for Adani Enterprises were up about 50%. EBITDA also higher at 833 crore rupees, and EBITDA margins also expanded to 6.8% versus 5.4%. For Aptech, we saw revenues of 51 crore rupees versus 40 crore rupees, and a profit after tax of 3.5 crore rupees versus 1.8 crore rupees, a good jump on the bottom line. For GE T&D, profit after tax came in at 46.1 crore rupees, a jump of 72%, and we saw top line growth of 21%. For Praj Industries, we saw profit after tax of 22.8 crore rupees, so a drop in its bottom line about 40%. And the top line too receding about 10%. So these are some of the stocks we'll watch out for on earnings. Amar, do you have a view on Dish TV? A few days back, we had technical analysts saying that the stock broke out above 100, and now again it's below 100. This is a stock that is not really rewarding its investors that have been patiently holding on to it. It can't hold on to those higher levels. What would you do with Dish TV?
Yeah, overall, looking at Dish TV, what Dish TV is clearly displaying that from a long-term perspective, when I'm looking at the stock on a monthly chart, it never was very strong. What it was displaying is that on the higher side, it's definitely going to meet with selling pressure, and that's what happened. If you look at the earlier tops also, that was somewhere in the region of 100 to 110. So clearly reflecting that there would be selling pressure coming in the market. And also, if I look at the weekly charts, there it had formed some bearish candle formations, and it was in the overbought zone. So we've seen some selling pressure as far as the short-term trend is concerned. Overall, there is selling pressure in this stock. A major support for this stock is somewhere around 70 to 75. That's a range of major strong support for this stock. The trend definitely is I would say, down. So one should avoid at least buying at the current levels. Wait for it to settle around these levels, as I talked about, 70 to 75. That's a level to watch out for the stock. The trend for the stock definitely is, I would say, negative.
Right. We'll wait and see as to what happens in terms of opening. Markets are just about to open. Anytime now, you should start to get prices. Lupin will be in focus. Dish TV, as Anisha mentioned, would be in focus. Syntex gets ex demerger today. That will be in focus. Adani Ports declared numbers yesterday. Concall, I think, was good. So that should be in focus. The entire pharma pack will be in focus. It has been selling. And plus, there are also a lot of expiry stocks that one would focus on. That's ACC for you, 2 to 3 rupees lower. Infosys, 7 rupees higher. ONGC up. ITC absolutely flat. Really no change for ITC. Syntex, 3 rupees higher. And IOC, results today, not doing anything ahead of results. BPCL, 2 to 3 rupees higher. Cipla, about 2 rupees higher. Results again for Cipla today. We'll get previews going in just a bit. Aurobindo Pharma, 2 to 3 rupees lower. And HUL, also looking slightly on the lower side. HDFC Limited, 10 rupees on the higher side. Dr. Reddy's down 16 rupees. M&M is down close to about, is up about 5 rupees or so, and Asian Paints is up close to about 4 to 5 odd rupees. So that's what is happening as far as these names are concerned. Let's pull up some stocks that are reacting to numbers or reacting to news flow that is coming in. Lupin, there you go, is 7% decline, 1140 for Lupin. Extremely weak in terms of numbers, in terms of what's happening. We got you the analyst con call, what sort of downgrades have come in. That's Dish TV for you, down about 5 to 6 odd percent. So that's also a name which is not doing particularly that well. 86, 89 rupees. Again, that's a results reaction that we are talking about. Let's pull up Bharat Financial. Bharat Financial is up close to 4%. There has been an upgrade. Okay, that's a results impact. Let's just first get the results thing going. So 2.5 to 3 odd percent decline. That's Bharat Financial for you. That's up around 7 to about 8 odd percent. That's happening because there has been an upgrade from Credit Suisse, and that has taken the stock higher. Jain Irrigation, of course, is also reacting to numbers. Global Vitara is up close to 18%. That's again a results impact. Adani Enterprise would be a results impact. 7,000 shares traded, looking in on the higher side, but it's a trading business, so numbers always tend to be very, very volatile. Aptech is up close to about 1 to 2 odd percent, so that's about 201, 202 for Aptech. GE T&D is at about 347, 48, so that's about 1 to 2 odd percent on the higher side. Praj Industry reacting to numbers. I think on a YOY basis there was a decline in Praj Industries, and that's why 17,000 traded, 1 to 2 rupees lower. BPCL down about 31,000 shares, slightly on the negative side. Anisha, any other names that you can pick up on the volume side?
Yes, there are a few unusual names. Pankaj, you've got Global Vectra Helicopter. This one is up 20%. It's a small cap stock we don't talk much of, but it is in the business of leasing of helicopters. So that one is up 20%. Bharat Financial Inclusion is having a blowout move. It's up 5% on that upgrade. HTIL is up 3%. I think DLF is also looking strong today. The volumes though not so strong. Manappuram Finance is up 2.5%. It had a good run a day earlier as well. JSPL is up nearly 2%, and Hindustan Constructions is up 1.5%. JSW Energy is also up 1.5%. On the losing end, we are seeing Raymond down 8.5% on high volumes. This is a stock to track. Plus, GVK Power and Infrastructure is down 7%. Reliance Defence and Engineering is down 2%, even though the cabinet has given a go-ahead for Indian companies to tie up with foreign defence manufacturers. Reliance Defence and Engineering is down 2%. IDEA is also down 2%. So these are the stocks that are moving on high volumes today. Because we've got news coming in that the cabinet has given the go-ahead for Indian companies to tie up with foreign firms for defence contracts, and the government has a stated policy of indigenous production of defence equipment. Which company or which stocks do you think are poised to benefit the most from this?
Yeah, Anisha, the announcements which came for the defense sector should be taken as positive for the entire sector. And I think from the private sector space, the stocks which I would be looking for would be the top would be the Bharat Forge, which looks good. Yesterday, the company reported its numbers. The numbers were also very good. And this company does a lot of work in the defense sector. So that looks good. And from the small cap ideas, I think Walchand Nagar Industries and Astra Microwave, these two companies should benefit out of this. So these are also another two companies which I would be watching from the defense space.
Right. So, this is what we want to watch out for, what happens to this defense, the entire business there. And, stocks in the reckoning would include L&T, even Tata Power, Vikas spoke about Astra Microwave, but, Bharat Forge, all of these stocks are in the reckoning there. Right. Mr. Harihar, would you bet on any of these defense-related names? Of course, we have the likes of, BEML that have been doing the work from so far, but, the orders have been just small parts, and, they're not the big-ticket orders. Which stocks would you view positively on account of this development?
See, I think it's a business that's going to build up substantially over the next 4 to 5 years. But then we'll have to really see which of the companies in India have the traction to absorb that kind of a defense business. See, among the smaller names, I think we have RDL, we have Walchand Nagar Industries. Now, these are much smaller names. But my focus for the time being would be on much larger names, like probably a Bharat Forge, a Larsen & Toubro, I think a BEML, Bharat Electronics. I think these are the kind of large companies which could really benefit from the first, pairing out of orders. So I think focus on the large companies which are expecting defense to become a larger share of their overall business. I think they could actually outperform in the next 4 to 6 months.
Right, Mr. Hariyar, but do you think defense could run a capex or run a capex cycle?
See, I think that would be a little optimistic, because even if you look at, let's say, large company like Larsen and Toubro, the overall expectation they have is that defense will grow to about 8 to 10,000 crores in the next 5 years. So I don't think that is really big enough to drive a capital cycle. But I think, yes, it could probably give a new area for, these large companies, and that could probably lead to re-rating of valuations. But I think capital cycle defense looks quite unlikely, at least for the time being.
Right. I mean, basically, it's not as big right now that it can drive a cycle.
Yes, you're right.
Right. What do you do with Bharat Forge? Did you look at the results? Of course, they are also a defense play, but how do you look at the results?
I think results are impressive. We also like the fact that they continue to be one of the largest in the truck business as far as the US is concerned. And defense actually is one area they are growing quite rapidly. So we have liked this company, and especially after the fact that the stock has corrected quite sharply to around the 1,000 levels, I think it looks to be a good level for entering the stock.
Right. Amar, what will be your call on Adani Ports? Now, that's a stock which did well yesterday after numbers, but I think today it's absolutely flat. But reports are suggesting that it's on the positive side.
Yeah, overall, looking at Adani Ports, what we are seeing is that the stock has corrected from almost 360 levels to currently trade around 340 after forming a base around 330 levels. So it is somewhat seems to be capped on the upside at around 340 to 350 to 360. That's a level where it would meet with stiff resistance on the upside. And also, if you look at the monthly charts, monthly charts are definitely strong, but intermediate trend somewhere is losing steam. So I see that on the upside, it seems to be capped around 350, 360. Yes, the trend for the stock definitely remains positive. If there is buying opportunity, that's somewhere in the region of 335, 330. That could be a range to buy with a stop loss below 320. And then the levels to watch out for would be 355, 360, because 360 seems to be capped on the upside for the short term.
Right. In terms of pharma pack, Amar, what will be your call for the overall pharma pack? Not only about Lupin, which is reacting to numbers, or any other company that declares numbers today. Overall on the pharma pack, what do you think? If markets go down, this will go down much more?
Yeah, overall, if you look at the pharma pack, what we've seen is that the pharma pack, in spite of the major rally, it's not really participated, and there have been more on the fundamental factors which have been there. So, and looking at the trend perspective, also I'm talking about looking at it from a technical perspective. Overall, there is any pullback is being used as a shorting opportunity. Even if you look at, I would say, the stocks like as you talked about Lupin, there's still downside to it, to 1,090, 1,100, that's a major level of support to watch out for. So overall, the pharma pack definitely, I would say, is more of, I would say, wait and watch, because there's still some downside to be left, and in the markets we see some crack, because currently what we are seeing in the major indices is that you're seeing some distribution, some consolidation around these levels, because the market is unable to sustain above 9,500 levels, 9,450, 9,500 levels. So I think that the pharma space is more in for more, I would say, selling pressure in the short term.
Right. So the best is to avoid, say, if somebody has also missed the move on the downside, the best is to avoid it at this point of time?
Yeah, I would say that, yes, for the simple reason is that we are not seeing, if you look at the advanced decline ratio, that also is clearly reflecting the declines more. So somewhere or the other, there is distribution, some profit booking is also coming in the market. So if there is some selling pressure coming in, the pharma sector could also be imported. So I would say that one should avoid in the short term.
Right. Mr. Hariyar, always people look at value, when such a fall happens. And these are companies which are very well tracked, very well known. Names like Lupin, names like Sun Pharma, any other. So from the long-term perspective, you suggest a buy, or we don't know the multiple if pricing erosion continues. That's why, you cannot say whether they are attractive or not.
See, I think that's the problem. People are not sure what multiple to assign to these companies now. Because, for the last 15, 20 years, pharma has always enjoyed high ROE and therefore it has got high Ps. Now the Ps are getting re-rated. If I understand right, most of the pharma companies are now at 14 to 15 times P. Now, if you look at it, that's actually a multi-year low. But despite that, there is uncertainty because nobody is sure at what rate pharma companies are now going to grow. Because the worry is that from here on, actually, the entire pharma model could change. It's exactly like what's happening in IT. The entire model could change. The entire focus on generics will have to undergo a shift. So how will Indian pharma companies adjust to that? I think that is where the biggest uncertainty is right now. Until that uncertainty gets resolved, at least partially, if not totally, I would believe that it's best to stay off pharma stocks.
All right, stay off pharma stocks. That's the advice that Mr. Hadir has. Amar, what do you make of the move in Bharat Financials? That stock has been on a losing spree for the last 7 sessions. Suddenly, it's seen a big move today. Was this to be expected, given that the price has moved away from moving averages? Do you think this arrests the downfall? Would you look to buy here? How would you approach the stock?
Yeah, overall, looking at Bharat Financials, what we are seeing in Bharat Financials is that Bharat Financials had a decent rally from almost 450 levels to 850 levels. But then again, there was distribution and it was a very, I would say, slow and steady distribution. And since then, we've seen selling pressure. If I'm looking at the long-term charts, I would say I'm talking about the monthly or the weekly. It's not displaying any sign of, I would say, a pullback or a rally. So what is going to happen is that at higher levels, again, it's going to witness selling pressure. It has bounced back from around 640, 650 levels towards currently around 700, 706 right now. But on the upside, there's going to be selling pressure. The range in the short term where it's going to meet with resistance is around 720 to 730 levels, and it's very unlikely to trade above 760, 770 in the short term. So I would say that any pullback should be used as a shorting opportunity with major support being seen around 640, 650 levels for this stock in the short term.
All right. That's a view on Bharat Financials. Vikas, do you have a view on Tata Motors? Tata Motors came out with strong earnings. That stock was up 5% a day earlier, seeing a little bit of correction now. Amongst the auto counters, along with Ashok Leyland, it has been one of the stocks that really hasn't performed well. Do you think now that is set to change? Do you think Tata Motors is going to become one of the outperformers?
Yeah, Anisha, I really believe so. The results which were declared by the company day before yesterday were pretty good, and we'd seen a sharp run up in the stock. But then any correction in the stock today would be a good buying opportunity. I'm bullish on the stock, and I think the kind of valuations which it trades at compared to its peers, the stock looks good. So I would be bullish on Tata Motors, and I would recommend that from a long-term point of view, the stock should be bought at the current levels.
Okay, buy on a long-term view. That's the advice that Vikas has for Tata Motors. Mr. Harihar, how do you view the earnings from Adani Ports? Would you look to buy this stock?
See, I think the earnings are fine, but we have a little worry that the stock has probably run up quite a bit over the last few months. And at these prices, we do believe that probably the upside potential seems to be lower than what I would call the neutral risk on the stock. So, we would probably wait for the stock to come down a little bit. Probably 300, 290. I think that would be a kind of a level we would be more comfortable buying Adani Ports.
Right. Amar, if you could just look at the charts and tell us, how some of the mid-caps are looking. Any mid-caps are looking interesting. Names like Stride Sashon have corrected. TVS Motors have corrected. Muthoot Finance has corrected. Any other mid-caps which are looking interesting? You may not have a buy on them at this point of time, but are they starting to look interesting?
Overall, looking at the mid-cap, I would say I'll start with Strides Sashon. What we've seen is that the correction has been extremely, I would say it's been, you can call it brutal. In the sense from almost 1250 levels to 900, and that's been a significant correction. So what I see is that overall there would be further selling pressure. Yes, what we are seeing again is that they are somewhere approaching towards a key support level. So that's the reason we are seeing a short covering, you can say, or some pullback or some short-term buying interest coming in. But overall, the mid-cap, what's likely to happen is that any pullback will be used more for booking profits or covering the shorts rather than going long at the current levels, because the markets, at least for some of these stocks, definitely they need to consolidate, because it's not going to be a V-shaped recovery in the sense for these stocks in the short term.
Right. Amar, you look at, of course, charts and tell us what's happening. But can you just tell us how important the expiry will be when you have such a move in the market, such sort of anti-consensus move in some of the stocks? Expiry becomes a very important event. Expiry and probably what happens in the next 3-4 days. Are, levels being sustained? Is there further selling or not? All that becomes quite important.
Yeah, if we look at, I would say, overall the broader breadth of the market, we've seen on the, I would say, the advance and the declines which I talked about earlier, that's clearly giving some indication on the first hand, so one needs to be slightly cautious. Secondly, if you look at the risk-reward ratio at these levels, that's something also investors would be slightly maybe wary of, and they would be on the cautious side. Technically speaking, what we see on the weekly charts, we've seen a doji formation last week, so the high of that has not been taken out. And if I'm looking at the daily charts, there again we are seeing selling pressure in the market. So any pullback or any upside move is being met with selling coming in the market. So I would say that till the market really does not sustain above 94.50, 94.60 on a consistent basis, we are going to see selling pressure. On the downside, the level to watch out is 9260, 9270. That's a technical key level for the market.
Right. Mr. Harihar, do you have a view on HCL Tech? HCL Tech is buying back shares at 1,000 rupees a share, and the record date is May 25th. It's at a significant premium to the current market price. What would you do with HCL Tech?
See, Anisha, honestly, I always believed that buybacks don't add much value to any company, because what you gain in the form of higher EPS, you lose in the form of lower valuations. So I don't think a buyback would eventually add much value. But even otherwise, forget the buyback for the time being. We do believe that within the IT space, Tech Mahindra and to an extent HCL Tech are two companies which are probably less susceptible to the US shenanigans as compared to probably a TCS or an Infosys. So purely from that perspective, yes, we would believe that HCL Tech is a good buy, but I don't think that the buyback per se would really impel us to go and buy the stock at these levels.
All right. Thank you so much for joining us this morning, gentlemen, and helping us with all the stocks we've discussed. As you go, please leave us with your disclosures. Amar, your disclosures?
I personally don't have any holdings. Yes, our clients could be holding some of the positions.
Vikas, your disclosures?
Yeah, Anisha, it would be safe to assume that my friends and my clients could have positions in the stocks which we have discussed today.
And Mr. Harihar, your disclosures?
See, the stocks we discussed, I don't own any of them, but we can safely assume we have spoken about it to our clients.
Thank you for joining us this morning, gentlemen. Pleasure having you with us on the show.